Listen to me extremely carefully, because what I'm about to tell you could be the actual difference between a comfortable retirement and eating cat food in your golden years. I am serious. We need to have a very real conversation right now about something that terrifies me when I look at the data. And believe me, I look at data every single day. It is what I do. I am Mr. Wonderful, and I do not sugarcoat things when it comes to your money. Before I get into the 3 safest exchange-traded funds, ETFs, that every retiree should own, I need you to do something for me right now. Hit that big subscribe button. Smash it now. Why? Because this channel is about protecting your wealth, growing your cash flow, and making sure you never run out of money. And if you are serious about your financial future, you need to be part of this community. So subscribe and turn on those notifications, because the information I share here could literally save your retirement. Now let us talk about what is really happening out there. I meet people every single day, good people, hardworking people who did everything right. They saved money, they put it away in their retirement accounts, they listened to their financial advisors, and you know what? They are terrified. They are absolutely terrified because they look at the market and they see volatility. They see their account balances going up one day and down the next, and they cannot sleep at night. That is no way to live when you are supposed to be enjoying the fruits of your labor. Here is the brutal truth that nobody wants to tell you. Most retirees are not prepared for a major market crash. They think they are, but they are not. They have got portfolios filled with individual stocks, or they are in funds that are way too aggressive for their age. Or worse, they are sitting in cash earning nothing while inflation eats away at their purchasing power like a disease. Every single one of those strategies is a disaster waiting to happen. You want to know what keeps me up at night? It is not my own portfolio, I can tell you that. It is thinking about the millions of people out there who are one market correction away from having to go back to work at 75 years old. That is a tragedy, and it does not have to be that way if you know what you are doing. I'm going to tell you something that might surprise you coming from me. When you are in retirement or you are close to it, you cannot afford to be a cowboy with your money anymore. The game changes. When you are young, you can take risks. You can swing for the fences. You can put money into growth stocks and cryptocurrency and all that garbage. Why? Because you have time to recover if things go south. But when you are retired, you do not have that luxury. You do not have 30 years to wait for the market to come back. You need that money now to pay your bills, to keep your lifestyle, and to enjoy your life. This is why I am obsessed with safety and cash flow in retirement. Notice I said both, safety and cash flow. You need both of those things working together. You cannot just hide your money under a mattress, and you cannot just chase the highest yields without understanding the risk. You need a strategy that protects your principal while generating income that you can actually live on. And that is exactly what I'm going to show you today. The 3 exchange-traded funds I'm about to reveal to you are not sexy. They are not going to make you rich overnight. They are not going to double your money in 6 months. But you know what they will do? They will protect you when the market crashes. They will pay you consistent dividends. And they will let you sleep at night knowing that your retirement is secure. That is worth more than all the gambling in the world. Let me tell you why exchange-traded funds are perfect for retirees. First of all, they give you instant diversification. Instead of owning one company that could go bankrupt tomorrow, you own hundreds or even thousands of companies in a single investment. That spreads out your risk. Second, they are liquid. You can sell them any day the market is open. Try doing that with real estate or a private business. And third, the fees are incredibly low compared to mutual funds. I hate paying fees. Every dollar you pay in fees is a dollar that is not working for you, not generating dividends, not compounding. Fees are the enemy of wealth. But here is where most people get it wrong. They think all exchange-traded funds are the same. They are not. There are thousands of them out there, and most of them are complete garbage. Some are too aggressive. Some are too concentrated in one sector. Some have high fees that will bleed you dry over time. And some are just poorly constructed products that are designed to make the fund company rich, not you. This is why I spent months researching and analyzing to find the 3 safest options for retirees. I looked at historical performance during market crashes. I looked at dividend yields and dividend growth. I looked at expense ratios. I looked at the underlying holdings. I looked at everything because when it comes to retirement money, you cannot afford to make a mistake. One bad decision can cost you years of financial security. Now, before I reveal these 3 funds, I want to make sure you understand something very important. The goal here is not to get rich. If you are retired and you are still trying to get rich, you are playing the wrong game. The goal is to preserve your capital and generate income. That is it. Boring, maybe. But you know what is not boring? Having enough money to do whatever you want for the rest of your life without worrying about running out. That is freedom. That is what we are building here. You see, when a market crash comes, and trust me, it will come, most people panic. They see their portfolios down 20% or 30%, and they sell at the bottom because they cannot take the pain. That is the worst thing you can do. But with the right exchange-traded funds, you do not have to panic because you know you are protected. You know you are diversified. You know you are still getting paid dividends even when the market is falling apart. I have been through multiple market crashes in my career. I have seen people lose everything. I have also seen people who were smart, who were prepared, and who barely felt a thing when everyone else was freaking out. The difference between those two groups is strategy. It is having the right investments in place before the storm hits. You do not buy insurance after your house burns down. You buy it before. The first exchange-traded fund on my list is a dividend aristocrat fund. Now, what is a dividend aristocrat? These are companies that have increased their dividends every single year for at least 25 years straight. Think about that for a second. 25 years of raising dividends means they survived multiple recessions, multiple market crashes, and multiple crises, and they still found a way to pay shareholders more money every single year. That is the kind of quality and stability you want in retirement. This fund is filled with companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble. These are businesses that sell products people need. No matter what is happening in the economy, people still brush their teeth during a recession. They still buy household products. They still need health care. These are defensive businesses with incredible track records. And when you own them through this exchange-traded fund, you get all of them in one simple investment. Here is why I love this fund for retirees. First, the dividend yield is solid, usually around 2.5% to 3%. That is real cash flow you can count on. Second, those dividends grow over time, which helps you keep up with inflation. Third, and this is critical, when the market crashes, these companies hold up better than almost anything else because they are essential businesses with strong balance sheets. Now let us talk about the second exchange-traded fund. And this one is all about bonds. I know, bonds sound boring. Everyone thinks bonds are for old people. Well, guess what? If you are retired, you are old, at least in investing terms, and bonds are your friend. But we are not talking about just any bonds here. We are talking about a specific type of bond fund that focuses on short-term, high-quality corporate and government bonds. Why short-term? Because when interest rates move around, short-term bonds do not get crushed the way long-term bonds do. They are more stable. They are less volatile. And in a rising rate environment, you are not stuck holding bonds that have lost a ton of value. You want flexibility, and short-term bonds give you that. Plus, they still pay you income. It might not be as high as a long-term bond, but the safety is worth it. This bond exchange-traded fund typically holds bonds from investment-grade companies and treasuries, which means you are lending money to the most credit-worthy borrowers in the world. The risk of default is extremely low. You are not going to get rich from this fund, but that is not the point. The point is to have a portion of your portfolio that is stable, that generates income, and that goes up when stocks go down. That is the beauty of bonds in a portfolio. They zig when stocks zag. During a market crash, this bond fund is your shock absorber. When everyone is panicking and selling stocks, bonds typically go up because investors run to safety. That means while your stock holdings might be down, your bond holdings are holding steady or even increasing, which cushions the blow to your overall portfolio. This is why every retiree needs bonds. It is not about being conservative for the sake of it. It is about being smart and protecting yourself from catastrophic losses. The yield on this fund might be around 3% to 4%, depending on where interest rates are, and the expense ratio is tiny, often under 0.1%. Now we get to the third exchange-traded fund, and this is the one that really brings everything together. This is a balanced fund that holds both stocks and bonds in a conservative allocation. Think of it as a one-stop shop for retirees who want simplicity. You buy this one fund and you get instant diversification across asset classes without having to rebalance yourself or worry about getting the mix right. These balanced funds typically hold around 40% stocks and 60% bonds, or sometimes 50-50 depending on the specific fund. The stock portion gives you growth and dividend income, while the bond portion gives you stability and safety. It is the best of both worlds wrapped up in a single ticker symbol. For someone who does not want to think about investing every day, who just wants to set it and forget it, this type of fund is perfect. What I really like about these balanced funds is that they automatically rebalance for you. When stocks go up a lot, the fund sells some stocks and buys more bonds to get back to the target allocation. When stocks crash, the fund does the opposite, buying stocks at cheaper prices using the bond holdings. This forces you to buy low and sell high, which is exactly what you are supposed to do, but most people cannot because their emotions get in the way. The fund does it automatically, which removes human error from the equation. The returns on these balanced funds are not going to blow your mind, but they are consistent and predictable, which is what you need in retirement. Over time, you can expect something like 5% to 7% annual returns on average, with much lower volatility than an all-stock portfolio. Now, here is the strategy I recommend for most retirees, and this is important, so listen carefully. You do not have to pick just one of these funds. In fact, you probably should not. The smart approach is to use all three together in a way that matches your personal risk tolerance and income needs. If you need a lot of current income, you might put more weight into the dividend aristocrat fund and the bond fund. If you can afford to take a little more risk for growth, you might add more of the balanced fund. The key is to build a portfolio that lets you sleep at night. Think about it like this. If you have $1 million saved for retirement, you might put $300,000 in the dividend aristocrat fund, $300,000 in the bond fund, and $400,000 in the balanced fund. That gives you diversification across different strategies and different asset classes. You have got income from dividends, safety from bonds, and growth potential from the balance mix. When one part of your portfolio is down, another part is likely holding up or even going up. And that is the beautiful thing about this approach. You are not putting all your eggs in one basket. I want to address something that I know some of you are thinking. You are thinking, Kevin, these funds sound safe, but what about growth? What if I live to be 95? Won't I run out of money if I am playing it too safe? It is a good question. Running out of money is not just about how much your portfolio grows. It is also about how much you spend and how you handle volatility. If you have an aggressive portfolio that crashes and you panic and sell, you will run out of money much faster than someone with a conservative portfolio who stays calm and sticks to the plan. Behavior matters more than returns in retirement. The goal of retirement is not to die with the most money. The goal is to live the life you want without running out of money. With the right portfolio in place, with these three exchange-traded funds working together, you can spend confidently. You know you have stable income coming in. You know you are protected against crashes. You know your money is going to last. That confidence is priceless. It allows you to actually enjoy your retirement instead of spending every day checking your account balance and worrying about the market. Listen, I know I come across as tough sometimes. I know I do not sugarcoat things, but that is because I care about your success. I have spent my entire career building wealth and helping other people build wealth, and I have learned that the truth is more valuable than making people feel good. The truth is, retirement is scary if you are not prepared. But if you are prepared, if you have the right strategy, it can be the best time of your life. You worked hard for decades. You saved money. You sacrificed. You deserve to enjoy your retirement without stress and without fear. The three exchange-traded funds I just shared with you are the foundation of making that happen. They are not exciting. They are not going to make you a millionaire overnight, but they are going to protect you when it matters most. Remember, in retirement, it is not about hitting home runs. It is about not striking out. It is about staying in the game long enough to win. And with these funds in your portfolio, you are going to stay in the game no matter what the market throws at you. That is a promise. That is Mr. Wonderful's guarantee to you. Before we wrap this up, hit that like button right now if this video helped you. Subscribe, hit the bell, and leave a comment below. Are you going to implement this strategy? What is your biggest fear about retirement? Now get out there and take control of your financial future. Build that portfolio, protect your retirement, and live the life you deserve. Thank you for watching, and I will see you in the next video.